Welcome to this Killick Explains video, and welcome to video number 3 in my Dividends Basics series. And this time I want to take on the topic of tax. Not all of it, but all the basics as they affect dividends. Because unfortunately as an investor, you cannot ignore the fact that dividend income is subject to income tax, as you might expect. And there are one or two quirks it's worth being aware of. So the tax can be a little bit tricky. Let's get straight into what I mean by that. So basics first of all. Dividends are income and they come with 3 dividend specific rates of tax. Now wait for it, this is going to appear next to me, you'll be glad to know, because remembering these numbers is tricky. The basic rate is 8.75%, the higher rate is 33.75%, and the additional rate is 39.35%. So not as neat as the general income tax bands, which are 20, 40 and 45. On top of that, here's another quirk. You add dividend income to other income to decide what band it falls into and therefore what rate you're going to pay. So it's sort of stacked on top. It attracts the higher of the marginal rates, as it's called. And the first 2,000 at the moment is tax-free. That will change shortly in the new tax year, but at the moment there's a dividend allowance. The first £2,000 of dividend income is completely tax-free. Now, an example. Let's say you earn £29,570. Why that number you'll see in a moment, just for illustration purposes, and you receive a £3,000 dividend. Now, the first thing to remember is you've got a personal allowance for any income that you receive, which is available tax-free, of £12,570. That's being frozen as an example of what Rishi Sunak would call, or Jeremy Hunt, a stealth tax. So here we go. Your taxable income, if you like, therefore, is your total income. That's what you've earned, £29,570, and the dividend minus the personal allowance, which is £20,000. And using the bands I just identified, some of this is popping up next to me as I speak, £17,000 will be taxed at 20%, okay, £2,000 will be completely tax-free, and that leaves, remember, stacked on top, £1,000 of dividend income at the basic rate for dividends of 8.75%, which doesn't sound too bad, but bear in mind the other 2 dividend income tax rates are quite a bit higher. So, what are we going to do about it? Okay, answer is the dividend allowance is being reduced in the future. That was a consequence of the autumn statement of 2022. So tax shelters are going to be pretty critical. Many people who receive income will want to shelter it within a tax shelter, and many dividend paying shares, you'll be glad to know, are eligible to be sheltered inside things like individual savings accounts and self-invested personal pensions. And once they're inside those shelters, there's no income tax to pay at any rate, fiddly or otherwise, on those dividends. Now some twists, a few things to think about. The first one is bad news. The dividend allowance, which has already come down, by the way, in previous years, used to be £5,000, it's already now only £2,000. That's the amount of dividend income you can earn tax-free outside of any other allowances you might use. Well, that is due to drop to £1,000 in 2023-24 and £500 in 2024-25. All right, so it's gradually evaporating, and that means people need to be thinking more creatively about how they use tax shelters and getting as much as they can into those tax shelters. Overseas dividends I haven't touched on here, they're fiddlier. So you're a UK investor receiving dividends from the US or somewhere else, for example. There are basically 2 things to think about, but I won't go into huge detail here. First of all, withholding taxes, that's where the local economy, the local regime deducts tax, all right? And you've got to think about, well, how much am I going to pay as a UK investor? The answer depends. There are double taxation rules that apply. As a rule of thumb, you'll end up paying the higher of either the local rate or the UK rate, but you won't pay tax twice. So withholding tax, worth asking an advisor about, for example, double taxation relief, also worth finding out about. These are quite complex areas potentially. And if you want to find out more about dividends in general, leaving aside overseas dividends, see a few more calculations, for example, then killick.com/learn. There's a tax effective savings tab in there somewhere. And or you've got my guides. Now there's one over there with a sort of blue cover, how to save and invest tax efficiently. That goes into some of these dividend rules in a bit more detail. Editor@killick.com for that one. And we do sometimes write about dividends and dividend taxation from the wealth planning team, for example, in this blue one here, and that's the quarterly magazine Confidant, edited by me, editor@killick.com. And don't forget, this is only video 3 in a 4-part series, which means number 4 is yet to come.